Hello, and welcome back to Reflections on Investing with the Cornell Capital Group. And today we're going to talk about what it takes to make a trillion, or more precisely, what it takes to have a market capitalization of $1 trillion. And there are 5 U.S. companies that have passed that barrier: Apple, Amazon, Google, Facebook, and Microsoft. And what did it take them to do that? Well, to answer the question, let's go to the iPad. And we have here 2 tables. One when they got halfway, 500 billion. The other when they passed that $1 trillion capital market hurdle. So let's start with the 500 billion. You can see that the first company that reached 500 billion was Apple in February of 12, and the last one was Tesla in November of 20. When Apple hit that target, it had 142 billion in revenues, and that was 2012 dollars, which are worth a little more, and 38 billion in earnings. Conversely, when Tesla hit that target in November of 2020, it had only 31.5 billion in revenues and 0.7 billion in earnings. Small fractions of what Apple had. Well, which one was the outlier? Let's take a look. The revenue at Amazon was actually greater at 161, but that's a retailer. At Google, it was 75. At Microsoft, it was 97. And at Facebook, it was 36. Facebook has very high margins, or at least did when it hit the target of 500 billion in July of 2017. Now let's see how long it took to go from the halfway point all the way there. So for Apple, February 2012, it hit 500 billion. About 6.5 years later, it hit $1 trillion. And that shows here. It took Amazon 2.8 years to make the transition. It took Google 4.8 years. It took Facebook 3.9 years, and Microsoft 2.2 years. It took Tesla 11 months. But the really interesting thing is that Tesla was able to rise from 500 billion in November of 2020 to $1 trillion in October of 2021 on only a $19 billion increase in revenues. Comparatively, when Apple made the transition, the increase in revenues was 200 billion. For Amazon, it was almost 300 billion. For Microsoft, it was 70 billion. So $19 billion was enough to catalyze the rise from 500 billion in market cap to the trillion. And the rise in earnings was only about $5 billion compared to, let's say, Apple, whose earnings increased by 22 billion. Well, does this all make sense? Well, it could. But what it's saying is that in today's market, particularly today's market for Tesla, this $1 trillion is not based on showing me the money now. These other companies that are worth $1 trillion have earnings that show investors the money now. For Tesla, the money's all coming in the future. So the market today is willing to bet on the future to the extent they never were in the past. So you can be worth $1 trillion on very thin earnings. Does that make sense? Well, maybe it does. It depends on how much you believe in the future, and in particularly the future of Tesla. But is it risky? You betcha. Tesla operates in a highly capital intensive, competitive business. And if it can't show the money eventually, then one would suspect that the price would drop. And there would be no reason that it couldn't drop all the way to 500 billion. In other words, drop by 50%, because Tesla's earnings now are less than any of the other companies except Amazon when it was only worth 500 billion. This has been Reflections on Investing.